So the convention, then your costing system also should change accordingly. The conventional way of doing the business matches with the traditional cost accounting system. That in traditional cost accounting system, what happens is I have the product cost. We calculate the product cost. How you arrive this? For example, how I arrive the material cost or labor cost or the direct expenses based on different factors. Example, material, you would have a catalog or a design, and that design or the engineers work out. This is how our material should be, and then they will say that they will have something called bill of quantity, BOQ, and accordingly you would arrive estimated cost of material. Likewise, the engineers will say how much labor we need to configure this particular product or produce this particular product, and then direct expenses also same. So then we arrived the product cost. The owners, what is their expectation? Their expectation is their margin, or in other words, profit. So they will add their profit and they will come up with selling price. This is conventional method. Now with this selling price, let's say $150, they call the marketing team, tell them, look, my product is 150, go and sell in the market. This is the conventional method. To a certain amount of years, from the very old ages, that was okay. It was going on. But the way the business is changed, the market is changed, environment is changed, everything kept on changing. Accordingly, the pricing method or customer's interest also changed. Now when a customer goes to a car showroom, he gives description. My car color should be pink. I should have in the something called like in the back of the dicky there's something on top, and I should have some shelf on the roof, something like this. They give a sort of expected list, and then accordingly they meet that, and then they produce. Or along with this, there is another concept that probably you all should know: just in time and TQM. JIT is just in time, TQM is total quality management. Now what is just in time? You don't produce unless you have a demand. What is total quality management? It's actually came from Japanese mindset. They say that there is no chance of having any errors. Error rate is 0. So coming back to this, now the success of this conventional pricing is no more. Now a new concept, target costing, came in. What they say that you first of all decide a business. You decide a business. Any business. You decide a business, and then you decide a product within that business. You decide a product. Once you decide the business and then once you decide a product, then you conduct a market research. You conduct a market research, a survey, and then find out what is the feasible selling price for this product which we could sell. Then you arrive a feasible selling price. The one interesting point you need to note here about this, whether you follow conventional method or you follow target costing method, still the owner's expectations remain the same. Owner wants his profit. Owner's profit generally won't change. What nonsense? I am investing $10 million, and if I don't get this percentage, no point of into this business. So what now he will do? See, now I have the is market price. I have the market price. Okay. From where I get this market price? From the answer to the market research. Then now I am going backwards. I subtract my desired profit. I subtract the desired profit, and the difference is known as target cost. And you call, now what you do is you call your engineering team or your production team. You tell them, look, my friend, I'm going to produce this. Your problem is produce at this price. Don't come and give me any excuse. You produce it. For example, this is 150 and this is 40, and your target cost must be 110. And you should enforce your internal production team or in your company staff to produce at 110. But in reality, meeting this is not that easy. Conversely, or in a different on a different situation, what you also need to do now, it is not that you producing something inferior. You cannot produce inferior. You have to produce at the stated quality, and in that stated quality, to produce with all the BOQs, you can do something called, you work out the estimated cost of production. Which will include this exercise, including the overhead. So you would do that exercise, okay? And this is estimated cost, and this is target cost. Now what you do is you subtract, find the difference between these two, and that difference is known as target cost gap. Normally, what is the normal scenario? If this is 110, this could be 125. So we needed to produce the product at 110, but the internal engineering team says, no, we cannot produce at 110, we can only produce at 125. So I have a difference of 15, and that 15 is minus. It's a burden for me. Now we have to find out means to bridge the gap. We have to find out means to bridge the gap. So in bridging the gap, there are various things we could do. See, I'll do it here. Market price, 150, desired margin 40, so 110. This is target cost, and minus estimated cost is 125. So I have a gap of 15. Now I need to make this one 0. We should make efforts to reduce this 15 to 0. One first effort to see if whether you can convince the owners to reduce the profit. If you cut down this to 25, then your life is very simple. You could easily bridge the gap. But if that guy says nothing doing, what the hell, I still need 40, then the next question is whether whether we can increase this selling price. Very difficult. The customers will not be willing to buy. You may find 205 competitors. So then how can you increase the selling price? So that is also not possible. Then come to the content of this. What we have? We have direct material, direct labor, and direct expense. Now, for example, if you look into my direct material, let's say 3 kilogram into 4.5 dollars. Example. Can I play with this now? Can I reduce this? If I reduce, am I able to find an alternative supplier who could supply me at a better rates? Can I do that? But mind you, not inferior quality. The quality must be the same. Okay. Secondly, can we increase efficiency? So one is efforts to reduce material price. Second one, increase efficiency or productivity of the product, of the material, sorry. Meaning, what I'm trying to say, now we are using 3 kilogram. Can we use, instead of 3, can we use 2.8? So some type of cost savings. Once again, the precondition is the outcome must not be inferior. So என்ன சொல்ற சூ கராஜில் வைத்து ஃபர்னிச்சர் வாங்குறதுக்கும் ஹோம் சென்டரில் ஃபர்னிச்சர் வாங்குறதுக்கும் டிஃப்ரெண்ட் இல்லை. இப்போ நீங்கள் then you could what do you call, compensate or compromise. You should make sure you are not compromising the quality. So same likewise direct labor. And then direct labor, what are the terms? Maybe you can look for that learning curve effect. Later we talk about, study how experienced the staff and how best they can provide you savings in the production. Can they save the time? Also, can you agree a collective long-term rate, a minimal rate with a committed number of hours? So you can also look for arrangement. Pardon? Yes, that is another I'm planning to discuss. So arrangement for managing labor cost. When I say labor cost, two elements, rate and hours. See, what about possible errors? See, when you in the production process, normally people allow a percentage for provision for errors. You should try to minimize the errors. That's where we talked about TQM. In Japanese mindset, they say that your production, we cannot compromise any errors. If you do that, the amount of error will be 1 or 2% only. British or European style, they say that normal loss of 10%, like in process costing. Normal loss of 10%, then you will end up having 25%. So you are restricting the possibility of any errors. And then as he said now, we can also look for non-value added activity should be removed. So these, if you do that, this gap will be bridged. And I think that's all you needed in target costing. Let's see the book. Target cost is the cost between the market price and the desired margin of the owners. Identify the sales price at which the product may be sold. Identify the required margin that the business wishes to secure. This may be a profit or indeed a contribution margin. Target cost is, you see, sales price minus required margin. And close the gap. That is the difference between the actual cost base and the, now here, this one I can also write.
It's the difference of the cost.
Pardon?
It's the difference of cost. I got target cost.
Sales price minus required margin.
You said something.
I said the difference between the market price minus the desired margin. Same meaning. Then the closing the gap. How to close the gap is the difference between the actual cost base and the target cost base. And these examples, I will share this example, but you may try as homework. Is that okay? Let's have it in the very useful, no? So do I need to go to this? Just I will read, but tell me whether you all can answer. This company has designed a new machine which should sell in the market at 7,800. This company wishes to make a profit margin of 18% and currently estimates from design work undertaken that the machine will cost using current specification 6,550. You see, here you have the selling price, here you have the profit. Again, please be watchful about the terms. Margin. Margin is based on selling price. So you calculate that and then you can first work out the what you call target cost. So selling price minus desired or required margin will be the target cost, and then actual cost is this. So this is the cost gap. So I am not doing that question. So closing the gap I discussed. What is this? Yeah. Suppose that target price is charged for haircut 40, the required profit of 15%. Therefore the target, okay, this is same. Okay, same. Now life cycle costing. I will share this. ஒரு question. இப்போ நாங்கள் ஒரு 8:30 கிளாஸ் பண்ணுவீங்க. லேட்டஸ்ட் எத்தனை மணி ஆச்சுன்னு பிரச்சனை இல்லையா? ஓகே. இன்றைக்கு இல்லை, but I'm thinking to start 8:30, can go up to 11 or 12. Okay for you, right? ஏண்டா தியரியும் செய்யணும், ரிவிஷன் செய்யணும். கொஸ்டின் செய்யாமல் இப்படி தியரி மட்டும் பேசினிருந்தால் we will not achieve the target. Then our target cost will become big problem, right? So because இந்த ஒரு மாதம் கொஞ்சம் மெச்சோர் அடுக்கிக்கேன், right? Now no, not today. Today anyway 3 months. Sorry, okay. Life cycle costing. Before we talk about life cycle costing, you need to understand something called product life cycle. Trend diagram is a reason தெரியுமா உங்களுக்கு? In trend diagram வரைஞ்சேன். Any idea, any reason you remember this? One is no. This is sales. This is profitability. You see? Okay, I'll complete that. Huh? Yes. So this you can use. In my, I will give you the username password. You use from your laptop, which this uncle's book. இப்போ ஈன this is, we call it development. This is introduction. Oops. Growth. Maturity and decline. There are 5 phases. In any given product, there are 5 phases. During the development phase, you will not have sales. You will only have expense. And as you increase your sales, and your loss will reduce. You understand me? So this is plus, this is minus, and this in dollars, and this is time. And during this period, see, this amount is the initial fixed cost of the company. Initial fixed cost is from, okay, yeah, that is, yeah, this is also correct. Now what he is saying is, yeah, no, okay, there is yeah, this was also okay, but that's the most appropriate one. So what would be this? It will go like this. Now at the beginning you don't have any cost, and as you develop, now correct, Adil?
But sales is wrong. Sales are
No, do that way.
Sales?
It's also introduction.
Yeah, so exactly. Sales will also change, correct. Sales will go from here.
And the consider introduction. So this.
It's okay.
Let me open from the book now. Wait. The book will have definitely. This is the most updated one. Now here what I want to explain you. During this period, you don't generate any revenue. You just incur expenses. And during the introduction period, you slowly do sales. So as you do sales, and so you have some income, more expense, but the loss will reduce, and at one point this will go to the profitability, and then accordingly growth, maturity, and decline. So here profitability also goes like this. Now during introduction phase, you got to carry out lot of marketing activities. During the development phase, research and development is the most common expense. In introduction, you will perform marketing activity in order to people to get to know your product, and then you will have the growth, and that time slowly saturation will try to develop, and you reach to the maturity. At this point, you got to decide whether to continue or get rid of this. So maybe then you differentiate. Example, Lux soap. If you see the different advertisement for Lux soap, let me try. Screen warle. Okay, I'll do it here. The oldest advertisement or new advertisement? If you Menagala. Yes. So okay. See here.
This is out panna.
Now close panna.
Plus.
This was one of the oldest picture. But now, and you see this shape. That time it's only like a solid rectangle shape. Then diamond, curve. Later, soap became liquid, powder. Because why? Simply because இப்படிதான் எப்படி நான் பண்ணுவார் அந்த சினாரியோவை எங்கேயோ இருந்துச்சுன்னா அது ரைட் இப்போ கொஞ்சம் தெரியும் so now at this point you go to carry out all this. So this is the concept of product life cycle. Now we coming up with one new concept known as life cycle costing. What this costing saying is include all the cost incurred in the entire life of the product. So now from a conventional cost accounting perspective, research and development we will not include into the product cost. Which calling? Call panum, answer panum. Okay. So in a conventional cost accounting perspective, we will what we will do, we will not include the research and development cost. But here what they say, you got to include all the costs in different phases which are not visible, which are sometimes hidden. So you put all together and maybe you may have year 1, 2, 3, 4, 5. So you include. So here, hello. நல்ல ஐடியா இன்னும் வந்து பேசுவாங்க ரைட் ஓகே தேங்க்ஸ் அவங்க இன்னும் வரோம் இருந்து கிரவுண்டில் ரைட் ஸோ now in a conventional what we do, for example year 2 we take the sales for year 2 and we take the cost of year 2 and then we calculate the profit or loss. But in the life cycle costing, you take the sales for the entire life of the product and then you take the cost of the entire life of the product and see the visibility of the product. Pardon?
Like the question happens the end of the
No, you got to make estimates. You get to predict the future cost and future revenue on a realistic estimate. You can't wait for the next 20 years to finish the calculation. You got to bring your good accountants, ask them to work out the realistic estimates, forecast, and put down that numbers for both sales and cost, and then calculate the profit and see if this product is visibility is good or not in terms of profitability. Your profit visibility. So visibility is good or not. If the visibility is good, continue the production. If not, don't do that. Understand me? So that is product life cycle, life cycle costing. So then this goes on to talk about that, and then I would request you to try these questions on your own and then talk to me if you don't understand. So with this be done with life cycle costing. Pardon? Yes. Okay. So now we can move on to throughput accounting. Where is throughput accounting in Jolly? This is another. இது பார்த்தலாம் அந்த it plays sound. பார்த்தோம் நீங்கள் நோட் பண்ணலாம் இது ப்ளே பண்ணிடு அப்போ அவள் வாசிக்கிறேன் ஸோ ஷீ ரீட்ஸ் பிரச்சனை தெரிஞ்சுனா எங்களுக்கு அதை வாசிச்சு உட்காந்து டைம் இருக்கிறேனே அது பிரச்சனை அடுத்து we need to show him the I will show you another good option now we just found. ACCA,
Hub.
ACCA Hub, Study Hub. So much of good materials inside.
Flash ones.
Everything is there. Flashcard.
Questions.
Yeah, it's for every
Membership.
members, I mean students, you have within your, I will show you later. Okay? So now,
Sorry.
on the other question. Constants. വിളങ്ങല I'm coming up. I didn't understand what you said.
Haven't they charged a 40 discipline?
Yeah, exactly. Contingency plan. Yes.
What, right?
F1.
The cat is which side to go to.
Yes. Exactly. They got the patient in transfer. Right. So I will share this. This is actually very small